Good morning, and with just 2 business days left of this quarter, it's worth just reflecting on global equity markets, the strength we've seen and why that is. Two business days left until the end of the second quarter of this year, and I think it's worth just spending a bit of time on reflecting on how global equity markets have performed so far. It's pleasing that we're on or set for positive returns for the third quarter in a row. If we look at world equities, they're up 3%. And then if we look more broader at the different regions, US market up 5.6% so far. And then if we look at UK, FTSE 100 and emerging markets, both markets are up just over 4% as well. Not all regions have had the same strength. If we look at Japan and also Europe, we've seen slightly negative or almost flat returns so far. And with European equities seeing weakness more recently following the European parliamentary elections and more recently the snap election in France. But on the whole, very strong. And I suppose the question is, why have equity markets been so strong? Well, it's a complex interplay of corporate earnings, economic recovery, falling inflation, and the prospect of lower interest rates in developed economies. The US economy is where we've seen the strongest growth impulse, and it continues to remain strong, and that's encouraging for sentiment and just the wealth effect for those individuals in the US, and that's really come through when we look at consumer spending. So consumer spending has been a core driver of economic growth in the US. In addition to that, you've seen government spending as well. So we've seen an expansion of fiscal deficits, which has really supported growth and particularly businesses. This is particularly pleasing despite interest rates in the US being elevated as central banks look to pull down inflation, and they've been somewhat effective of bringing down inflation. Inflation right now is somewhere around 3%, and we'll get the latest reading on inflation in the US on Friday, so stay tuned for that. But on the whole, the strength of consumer demand is really supporting corporate profits. Profits for the first quarter of this year have been stronger than average, so we've seen expectations being exceeded more than average than what we typically expect to see in a reporting cycle. So on the whole, US equities have pushed higher, and so have global equities. I suppose one additional theme really driving equity markets has been the strength of technology stocks, and that's why the US market has particularly been benefited, given tech and communications is a large proportion of their main market, the S&P 500. US tech has really been propelled higher and reaching ever new highs, given the enthusiasm, the development of AI technology. They have the world's best companies in AI, the likes of NVIDIA, which has seen exceptional returns. To provide context to this, just this quarter alone, NVIDIA is up 40%. In the first quarter, it was up 80%, and NVIDIA is boosting the returns of other large tech firms, the likes of Amazon, Meta, and Google, and they're all benefiting from this euphoria of AI, and that's driving the markets. So what do we take from this? Well, investors have been rewarded for being invested and being exposed to risk assets, likes of equities, and that's despite the uncertainty that there often is when investing, the likes of high valuations, inflation, slow economic growth, or just higher interest rates. So a lot to be uncertain about, but equity markets have moved forward and investors have been rewarded. That's everything from us today. If you like the content, please subscribe and like, and we'll see you tomorrow.